David Carson. Welcome to Unscripted.
Thank you for having me here, Pete.
Pleasure. Mate, tell us a little bit about yourself. Who are you in this great business that we're in? What's your background?
Well, I've been in this industry and in and around the traps probably for close on 25 years. I had 10 years with ASIC in senior ASIC roles and enforcement and compliance roles.
Does that mean we should like you?
I'm outside of ASIC now, so
we like you then. Okay.
And I've been in regulatory compliance on a consultancy side for about 12 years now, working with licensees, helping them understand their regulatory compliance obligations, and also doing a fair bit of work with the FBAA on the old consultation to government when law reform and when new regulatory guides are being produced.
How did you find your time with ASIC? That would have been interesting.
Yeah, look, I was quite junior when I started there, but became involved in a lot of projects. I had a good background. I had a background in financial planning and law, which was unique for being in ASIC at that time. So I worked in a lot of financial advice projects and some of the really big collapses that happened. So it was actually a very exciting time to be part of ASIC. And I was also there for when the credit legislation was introduced.
Right. Rumour tells me you wrote the original script for RG 209, Responsible Lending Obligations.
My fingerprints are on that. I was not the only one, but my fingerprints are certainly on that.
Interesting way to look at it. So ASIC, planning, law, it makes you a bit of a unique expert in my books.
Oh, a bit of a platypus, perhaps.
Hey, well, let's have a chat about some of that. So let's dive into some things around ASIC. What do you think the priorities are in 2026 for ASIC?
Yeah, so ASIC structures its priorities around what it calls its strategic priorities, and then it has enforcement priorities. So the strategic priorities kind of look out 4 or 5 years, and it's a bit of a broadcast about what ASIC's going to try and get done over the next few years. And then it does its enforcement priorities, which focus on the next 12 months. So the strategic priorities that probably really focus on our industry are around consumer protection. So that's a really big strategic priority, which is going to probably carry ASIC forward for 3, 4, 5 years.
Isn't that already a priority for the regulator, though?
Yeah, well, it is essentially a consumer protection organisation. So yeah, it is one of those core ones that's thematic and stays with it for a long time. But you know, when you look at how they talk about consumer protection now, it's about diving into specific areas about of consumer consumption of credit and financial products.
Do we have any hint as to what's sort of top of the list?
Yeah, so I think what we've got in when you look beyond the strategic objectives of ASIC and look at their enforcement priorities, that kind of gives you a window into what they're going to do in the next 12 months. So their enforcement priorities for 2026 involve mortgage broker compliance with best interest duty, focusing on vulnerable and low income consumers and helping them get better access to credit, fairer access to credit, I guess you could say. We're looking at IDR handling is going to be another big focus for them. So this is how people handle complaints and how they respond to consumers to give them that fairness kind of feel.
So ASIC's already doing audits under bid, and they started doing them a couple of years ago in stocks. I didn't find anything. So we're back into that mode again. I think we're getting probably close to the back end of that by now. You expect they're going to find anything systemic that's going to be a major problem, or is it more going to be, we've done this audit, we've got to justify why we've done the audits, we're going to find this bit and that bit, and we'll deal with that, and then maybe we move on, sort of thing. Do you think that might be an outcome?
Yeah, I think one of the really interesting questions is going to be whether they're auditing against the law or they're auditing against their guidance. Because as you know, the best interest duty, the law is only a couple of sentences long. The regulatory guidance, RG 271, which was written for bid, is 140 odd pages long.
So what do brokers need to know, right? Because the enforcement part's the scary part. So there's a knock on the door and ASIC's at your front door and you're a broker. And I heard you say a couple different things, right? So we're talking about best interest duty, which I think has been fairly well covered and people know about how to document it in your notes. IDR, right? Like there's a whole process you have to go through with IDR with very strict timeframes and how you respond. So is that the sort of stuff that they're going to be knocking on the door to make sure that people are following due process and pulling the office apart? How do you think it's going to play out?
Yeah, there's a couple of ways ASIC can come into that information. And so we've got this obligation to report IDR information every 6 months. So every licensee has to report its complaints handling for every 6-month period. And ASIC will look at that data and compare that to what it's seeing at AFCA And if there's discrepancies, it might actually flag something that ASIC says, well, hang on, this licensee is telling us they've got no complaints, but AFCA is telling us there's lots. So that could result in AFCA paying you a visit. Another way that they look at that is from financial counsellors and other organisations that are providing intelligence to ASIC about what's happening in the industry. And so you could get a call from ASIC where they're receiving intelligence from third-party sources about what's happening within the business.
Wow. Okay. So it's like the deep, dark, secret phone calls that are made about each other.
And then you got the new challenge is the new chairman, or not chairman, sorry, new CEO, I should say, in ASIC, who's ex-Choice consumer advocate, who's a dear friend, not. How do you think that's going to play out for us, or is he just out to crap in our nest?
Yeah, look, I think he's got some very strong views about what he believes brokers do. I think that there would be a certain level of motivation to uncover information that reinforces the views that are already held by that commissioner. And so what I'm saying there is I think that there will be a tendency to look at negative information about brokers and credit intermediaries and go, yep, that must be true because that's what I believe to be what they get up to. And we're going to have to work hard to present the other side of the story to make sure that the story that's coming forward is balanced and fair.
But if brokers are all doing the right thing, then in theory, one would hope in practices it plays out fairly fair and reasonable, wouldn't it?
Yeah, and I think you do see that. And so what you tend to find now is that the enforcement action that's taken is against the really obvious things that no proper broker would do, right? So fraud, stealing money, those sort of behaviours that everybody knows they shouldn't do, they're quite easy for ASIC to prosecute because they're breaking very, very clear-cut laws and the evidence is there. And it's a great headline because you can say, there we go, there's another broker done the wrong thing.
So they're going after the low-hanging fruit and predatory lending. Yeah, that's what you were intimating before, right? Specific types of lending products. Is that in the private lending space? Because there's been lots of changes in that space lately and lots of new entrants to the market. And there's also been a lot of cleanup in that space too. So yeah, have they indicated any type of lending that they're going to be looking at?
Yeah, one of their priorities for next year is private credit. And so private credit is this idea where you're not giving regulated credit, so you don't need a license, and you're introducing people to access to money through channels other than regulated consumer credit legislation. It gives people providing that sort of credit a lot more scope to make decisions about when they're going to lend and on what terms. And ASIC has said that they've got some real interest in that area for next year.
But let me rephrase that. A lot of private lenders are holding ACLs and AFSLs as well. So even though they're not in the consumer space, they have met those sort of regulatory rigor, I guess for the sake of a better term, and generally none of them that I'm aware of operate in the consumer space. So, yeah, it'll be interesting to see what ASIC's looking for and how that plays out.
That introduces another interesting point. So when you're looking at credit that's provided outside of the consumer space, if you don't have a license, or if you do have a license, then basically all of the credit that you're providing is potentially pulled in under that license, whether it's regulated or not, because as a licensee, you are regulated. But even if you're providing unregulated credit, the ASIC is getting stronger on some of the other tools that it has to intervene. They have powers under the ASIC Act to be able to take action against credit. So it's not just the consumer credit protection legislation that gives ASIC powers. And we've seen AFCA get in that space as well.
Yeah, so you and I have worked on papers in the past where we've clearly identified ASIC overreaching the law. Do you think that'll play out in this as well? Or do you think this is all fair and reasonable?
I think you have to test the boundaries as a regulator. You sometimes have to take actions you know you're going to lose, but you have to be seen to be taking that action. And I think you also need to run test cases that perhaps test the boundaries of your power. So we may see action next year where ASIC's not 100% sure whether it's pulling the right trigger, but it'll have a go.
Yeah, it sounds like fun.
But
you don't want to be on the receiving end of
that.
But it sounds like it's more for those that are really crossing the line rather than, maybe somebody that's using AI for their file notes and the languaging is the same, right? So, I mean, I guess it's what level of minutiae are they going to get down to? But it's still pretty scary when you get a knock on the door. So what would you say if you were a broker to prepare for this?
Yeah, well, you mentioned low-hanging fruit earlier, and I think that's been a criticism that's given to ASIC, is that they tend to pick on the easy ones, the easy wins. To some extent, that's true, but I think some of the harder cases are bigger and harder to run. So there's a mandate that ASIC cleans up the easy messes, and so they do take those obvious ones out. For brokers in this space, I think the safest and best way to tread is to make sure that you take great records of what you do. So if somebody challenges you about the services that you've been providing, you've got evidence of what you've done. I think it's much easier to have an argument with a regulator about whether what you've done is right or not than it is to have an argument with the regulator about A, what you've done, but B, whether you've created any records to prove it. Because then you've got two different arguments and two fights on your hand.
So continuing on supporting brokers and members, regs, the new group that's been set up. So can you maybe talk us through, why was it set up? What's it going to do? What do you see as the vision for 2026 and how is that going to help brokers?
Yeah, I think regs is a really exciting part of what we're starting work on now. We have the FBAA has always had an advocacy component, and Pete's been excellent in the amount of work that he's done in that space. And I have been with the FBAA for a number of years in a sort of a more quiet capacity, assisting with some of those submissions and the representations that we make to government and to regulators. Where it's going now, though, we're going to be a lot more proactive and a lot more obvious in what we're doing. And so we're wanting to have proactive conversations with regulators and with government so that they're thinking about brokers when they're making the law and when they're making the regulations. They're not just hearing after it's come in that it's not fair and it's not operating the way they intended it to.
That'd be amazing, right? I mean, to get in the front foot, Pete.
Yeah, well, we've seen many times over the years that regulators come out with stakeholder engagement opportunities, and Dave says, yeah, they've already made a decision on that, so we've got to get in front of the curve.
So what do you think is going to be the gap? Because there is a big gap, right? Like advocacy and regulation. I mean, every broker knows that it's out there, that we need it, but it's not something that they get access to or information. So obviously there's parts of that you can divulge and parts of that you can't. So how do you see that playing out next year?
Yeah, so I'll give you a little tip. ASIC doesn't really care about brokers.
No.
I find that hard to believe.
Right, so they're a consumer protection organisation. They're a law enforcement agency. Their focus is on consumers. And sometimes their pathway to getting to consumer protection is like an elephant running through a cane field, and the brokers are the little stalks of cane out in the field. There are different ways to get good consumer protection outcomes, and what we're trying to do is get government to better understand that brokers are actually part of the consumer protection program. They're not the problem. And so we can work with government to get better laws and more effective regulations so that the consumers' outcomes are good, but brokers aren't being unfairly penalised with excessive rules and requirements that just make the risk of making a mistake and getting into trouble that much higher.
Because, every single broker listening to this right now is thinking, WTF, all I do is act in the best interest of clients and consumers and paperwork. So they're probably wondering what the heck is even out there to explore, right? I mean, you're always going to have some naughty people doing naughty stuff. That's humanity, right?
That's numbers.
Yep. Yeah.
Well, yeah, and when you look at that, so brokers are saying we're already doing the right thing. ASIC says, are you? We'll prove it. So we want you to create this record and this record and this document. We want you to keep this, 10 registers that show everything you've done and everything you haven't done. We want you to keep a list of the products you did consider and you didn't consider and what you recommended and why you didn't recommend this one. And so what we're trying to do is work with those sort of scenarios to say, look, there's a better way to get to where the brokers are keeping the records that matter, customers are protected, and the regulator's got confidence that the system's working.
And you kind of hope that ASIC would also be looking at the AFCA data, our ombudsman, whereby we can see that complaints against brokers, I think, are down around about 0.3% of all complaints that AFCA sees. And there's been an explosion of complaints with AFCA, and they're putting on more people and so on and so forth. But you kind of think there's a balanced perspective that needs to be had. If brokers are doing things that are really wrong and really bad, AFCA complaints would be through the roof, and it's just not there. It's actually static.
Yeah, it's probably not just AFCA complaints.
Sure.
The lenders are
I'm saying a balanced view from a regulator.
Lenders are probably tipping off ASIC about all the bad brokers as well, right? When I should use air quotes when I say bad brokers. I mean, look.
I think he's got inside oil.
Maybe. That's why we got him.
Yeah. But getting back to AFCA, right? And, you know, that whole process, because there's been a lot of frustration for brokers over AFCA and it can be really stressful. You know, a couple of years ago, they brought in the huge fines. Like, isn't it up to $1 million now that they can enforce? I mean, it's not small beer anymore, right? Like, you know, they are a force to be reckoned with. And as Pete said, like, the broker complaints have been very, very little. I mean, from your side, what have you seen about broker interaction with AFCA? I know they did a big cleanup because they just didn't have the people and the skill set to be able to investigate what they're being asked to investigate. And they're tiering with their fees and, you know, how that works, right? So, I mean, there's an initial fee when the complaint comes in, and then there's initial fee if it gets past, you know, the next 3 weeks. And a lot of people are having to settle because it was just commercially not viable to fight, you know, a $500 claim over something that was going to cost them $3,000, even though a matter of principle, they knew they hadn't done anything wrong. So there's still a little bit of cleanup going up there, right?
Yeah, there's still plenty. And you talk about this. I liken getting caught in an AFCA matter to being like in quicksand. You can't get out. Once an AFCA claim is commenced, the only way it will stop is if the consumer, the complainant, is happy with the outcome, which generally means they're overcompensated or get everything that they've asked for. So the only way out of an AFCA claim, other than it being discontinued, is to see it right through to the end. So in that case, it goes through to a determination where AFCA will make a hearing or conduct a hearing and actually find in favour of the broker. That's the only way you get through the whole process and come out without having to pay some compensation. And you get a bill from AFCA at the end of about $7,000 to $11,000, depending on the type of hearing that's held, to be told that you haven't done anything wrong.
Are there any get out of jail free cards? Like, is there any considerations where the broker doesn't get charged?
So there's a few. One of them is if you're not a member, but of course, if you do consumer credit, you have to be a member. However, if you're a commercial lender and you're you don't have a credit license, you don't have to be a member of AFCA. So, and AFCA can't hear a complaint against you if the firm is not a member. The other one is that through some good lobbying that the FBAA did a couple of years ago, there are 5 free complaints per member. Now, if you're a licensee, that covers all of the reps who are of that licensee. But the first 5 complaints are fee free, and that's regardless of whether you are successful or unsuccessful. So that at least helps smaller licensees that may only get 2 or 3 or 4 AFCA claims a year to be able to defend those claims without risking extremely high costs.
Most brokers are under aggregation groups with, you know, thousands of other brokers. So very, very limited, I guess, support at that level. And I mean, we've had phone calls in here, people that are really distressed by the process. And it's not just the cost, it's the time involved in putting it all together, you know, and all the research and all the preparation. I know this is probably a no, but do you think they'd ever consider that, you know, if the claim was made in favour of the broker, that the consumer actually had to pay? Because there are some people that just work the system, right?
Yeah, you enjoying the dream?
Oh, yeah.
Yeah. So yeah, no, that'll never happen. But I do believe that there's a middle ground where a complainant who is who lies and presents false information should be denied compensation. So not paying the costs of the broker, but I think it comes out in AFCA hearings that consumers have provided false information. You know, I've been involved in matters where consumers have submitted statutory declarations and then openly admitted that the information is completely false. Yeah. At that point, I think that AFCA should have the power to say, you know what, if you're going to mislead us, we're not going to find you to be a credible person, and you're not entitled to compensation. I think that'd be a really great outcome if we ever got to that, but it's unlikely.
Yeah, unlikely. Hey, while we're talking about AFCA, so let's talk a little bit about how AFCA, the Ombudsman, interacts and plays with the compensation scheme of last resort, which is another more recent piece that's evolved in the broker space and also the financial services space as a whole. Give us a little understanding from your point of views. What does that look like? How does that work? Is there a process, or is it just we're creating a pool of money that anybody can reach into and grab?
Yeah, so the compensation scheme of last resort was created. It was only a couple of years ago now, and the intention of it is to have a fund that can pay a determination to a consumer where AFCA has made an award to that consumer, but the business that the award is made against has gone out of business. So they've got no money, they've gone into administration. The consumer has no way of recovering the payment that they've been awarded by
No
AFCA.
PI.
No PI. So basically there's no money left for the consumer to chase. And there were millions of dollars of unpaid determinations where consumers had genuinely been entitled to get compensation, but there was nowhere to get it from.
So basically the business has got to go bust before the compensation scheme last resort kicks in. Is that basically right in a simple view?
Yeah, basically
So I didn't
all
realise
avenues
that.
of recourse have to be exhausted. And if
Yeah.
there's no other way to get money,
Yeah.
then the award, the determination can go to the compensation scheme of last resort for it to be paid.
So before it goes there, though, given brokers, consumer brokers we were talking about before, are all under aggregation groups, the aggregator is generally the license holder. I say generally. Does that mean then they go to the broker, can't get out of the broker, broker could go bust, but the license holder, the aggregator, isn't. So then they are on the hook as well before it gets a compensation scheme of that sort. So then basically before it gets to that, the aggregator's got to go bust.
Correct.
Is that right?
Absolutely.
Crap, that's not fun.
Yeah, absolutely. So basically, if there were an award made against an individual broker, and that broker sits under a licensee as an employee or a credit representative,
Yeah.
that liability will stay with the licensee, and so the licensee has to disappear, and there'd be no more money left in that entity for the determination to be paid before the CSLR would even get involved.
But they put aside millions of bucks for this, right? Like
Oh, that's in the pool.
Yeah, in the
pool
pool.
they're creating. But not all the pool applies to mortgage brokers, right? Because there's others that have got their hands in that pool and it's divvied up for different weightings.
So when the CSLR was formed, they had this idea that it applies to 4 different groups, 4 different subsectors. So it's people who give personal financial product advice, so financial advisors, securities dealers, stockbrokers, lenders and brokers and aggregators. So
all in the one
mortgage intermediaries is that group. And the idea is that there's $20 million in each bucket, and each bucket should pay determinations that relate to activities in that group. So financial advisors has 20 million, lenders has 20 million, brokers have 20 million, stockbrokers have 20 million. So unpaid claims relating to those sort of activities come out of that bucket. But we've now got a compensation scheme of last resort where the levy, the total amount they think they might have to pay, has gone up 500% in 2 years.
Wow.
That's insane.
So in 2025, they estimated the total that was payable was about $24 million. For 2027, they estimate the total payable is about $137 million.
So what does that mean for brokers? They're going to do that across all the buckets?
Well, when you would think if you're a scheme administrator and you've got $80 million in 4 buckets, but you need $137 million, it's tempting to put your hand into the other buckets. But what they do is if they go over the limit of one particular bucket, they have to apply to get ministerial permission to somehow get the money from somewhere else. And that can either become through a special levy where they go back to industry and say everyone's going to kick in more money for 1 year to cover it. They can slow down payments over a few years so that they just grind away over a few years, or they can come up with some other mechanism.
Shouldn't they leverage the sector that caused the problem rather than everybody that's in the buckets?
Yeah, that's certainly the position we've always advocated, that, you keep it close. The problem is when you've got one sector that's shouldering losses of hundreds of millions, and bearing in mind that 2027, an estimate of 137 million, about 92% of that relates only to financial advisors, and it doesn't include the Guardian and First Shield collapse that happened during the year, and they're estimating the losses there to be around $1 billion or more.
That's a lot of money.
So that subsector only has so much that can be levied, and the financial advisors have seen their levies go up 400+% in the last couple of years.
A lot of them are saying they're just going to have to close up shop. You know, that with the changes that are happening, that it's just not going to be viable for them to be in business, and it's going to really shake things up for financial advisors next year. So it'll be interesting to see how they handle that.
Mm-hmm.
Yeah, look, there's some other areas where government could look to kick in. So as the scheme exists now, the government has no responsibility to contribute any money to funding those levies and funding any shortfall. But they do get some significant revenue from fines that are levied against businesses, and other, when they have a successful court action and there's penalties and damages paid. We think that some of that money could be redirected back into a compensation scheme. So let's say you have a litigation against a bank, and that bank ends up paying $100 million in fines and penalties as a result of that litigation. We think one of the potential options is for the government to say, look, that money was raised off of a consumer institution. We should put that back into a consumer remediation fund. So that's one potential area that could be explored.
Well, with all that negativity of these major numbers we're talking about, out of that $137 million pool you were speaking about before, from memory, only 2.2 billion of that, or around 2.1 billion of that, actually complies or is levied against mortgage brokers.
Million?
2 million.
2.2 million.
Yeah, we're not in the billions yet.
Yeah, 2.2. Did I say billion? Sorry.
Yeah.
Hey, look.
That's in 2028.
That's it. Yeah. But yeah, so 2.1 billion, up from about 1.8 million for the year prior. So
correct.
It's gone up a lot, but it's not this big, massive pool, or the even super massive pool yet to be determined.
Yeah, well, it's less than 1.5% of the total estimated levy for 2027. And it's 2 million when they're raising 20 million in that subsector.
Yeah.
So there's enough in that bucket to pay out all the determinations against our area for a long time to come.
Can we be really cheeky? So you said one of the buckets is the lending bucket. What's happening there?
Well,
I think that bucket's too small, though. If we're all on 20 million apiece,
I know.
lenders should be 4 times that.
I know. All the brokers are like, but hold on a minute. Most of this is with the lenders, right? So what's happening there?
That's what you think. I mean, a few $1 million is just tea and biscuits for a large financial institution, but a fine of $20,000 to a small business or a broker can potentially be catastrophic. And I think there's some proportionality that needs to be reconsidered in who has the money. I guess banks probably get a little tired of everybody saying, oh, come on, you make enough, just kick in and get it fixed. But let's face it, we've got 4 major banks in Australia and a population of 27 million, and their collective profits are probably topping out of close to 30 billion a year. It still baffles me where 30 billion comes out of a population of 27 million when probably only 60% of that population are eligible banking age. They're either too old or too young, everybody else.
Yeah, but the banks do it really tough,
I feel for them.
No, their net profit certainly doesn't say that.
Yeah.
And so I've got another question. So if you're a broker and you have had an AFCA case determined against you, does that affect your ability to get AFCA the next year, which you need to actually trade? Is that something the brokers need to worry about?
No, it doesn't. But one of the interesting things is if you get an AFCA determination against you and you don't pay it, that's the end of your career. Right. Because they will report you to ASIC, and the ASIC will cancel your license or your accreditation. You'll get banned from the industry.
Right. So what AFCA says goes.
100%.
Yeah, you don't want to mess with it.
Like I say, it's quicksand. Once you're in there, there's nobody standing on the edge throwing you a vine.
I think I need to talk about something more positive.
Okay, I think so. I'm trying to move on from this subject.
Yeah, absolutely. And I guess getting back to the initial thing about file notes and brokers being compliant, and there's massive changes in AI. Like it's just head spinning, what's happening, the speed of what's happening with these programs with video and note taking, and what's going to happen with AI, but also how do we keep brokers safe, right? Like what's going to happen with regulation in this space? How do you know who to trust? It's daunting on 2 levels. The speed that it's changing at, but also understanding if I sign up for this, is this actually okay?
Yeah, it's a really difficult area to keep across just because of the pace of change. To some extent, I liken where we're at with AI now to where we got with this idea of automated or robo advice that came in years ago, where you could plug in a range of attributes of a customer. So you've got a couple who's in their 30s, they've got 2 kids, they've got a household income of 150,000, and you punch in the numbers, and robo-advice says, oh, you should be investing $5,000 a month into a balanced growth, sort of fund for investing. And everyone was like, oh, well, that's the end of the advisors. We'll go robo-advice. But in reality, robo-advice was really just a glorified calculator, right? It's garbage in, garbage out, put the right numbers in, get the right numbers out. AI is touted as being something more than that because it's intelligent. It's actually trying to not just crunch data, but it's trying to interpret that data and produce more nuanced outcomes. I think we're not there yet. And so I think ultimately, even though we've got artificial intelligence potentially helping some of our processes, the people who tell it what to do are ultimately responsible for the output. And so licensees will still always be accountable for whatever happens to the customer, regardless of whether it was a human that gave them that advice or if it was AI. So in that sort of assisting customers to find the right product space, there still has to be a set of human eyes on it going, yeah, that looks right, that's okay.
But it is an exciting development and evolution in our industry. I was at a seminar recently where they showed a timeline that we're in an unprecedented time anywhere else in the last 4,000 years. Now, if we go back into the first part of that, so 2,000 years BC, technology was never not existent, right? So it's like, it sounds good, but yeah. But the interesting piece I saw in the data they were sharing was that the increase in the evolution of the versions of things like ChatGPT and all those things that are driving AI behind the scenes over the period from March to December of 25 is unlike any other time. It's just exponential growth through the roof. Now, if we look at the evolution of these things, mobile phones, I remember having one that was like a brick and almost broke your shoulder to carry it around.
Yep.
These days, that the power of the technology of these things is off the dial. I kind of think that we're on that cusp. I can see where people are using AI and it's beneficial. I just think the thing's just an explosion waiting to be ignited and probably is already, the fuse is lit. And it's a bit like, the sun rising in the morning or the tide coming in. You ain't going to stop it. It's a matter of how we work with it. So whether it's what's happening in regulation, but also too, where this thing will go. I mean, is Arnie knocking on the doorstep? We've got Terminator 50 coming down the line.
When it becomes self-aware, it realizes it doesn't need any of us, right? Hey, look, if AI gets really smart, it might actually figure out a better way to have a licensing regime that doesn't get the wrong person in.
Does that mean we get rid of ASIC?
Maybe AI's first recommendation will be to rejig AFCA and make it a little bit more unbiased. But no, look, I think AI is great for filtering out a lot of white noise, getting to the, condensing information, grabbing data, crunching data together into digestible packets. So things like record keeping, AI is going to be brilliant for record keeping because it's able to produce a perfect record of what happened. And one of my pet hates as somebody who used to work in enforcement is hanging someone out to dry who's actually done the right thing, but has just done a really bad job of keeping notes about it.
You would never do that.
Personally, no, not me. I was the kind one. But you get me. So I think there's a difference between bad conduct and bad record keeping. And for bad conduct, sure, get in trouble. Bad record keeping, get a slap on the wrist, get some training, be steered back on track. But if you're actually giving good outcomes to customers, you shouldn't be having your career put at risk for having poor note taking. So I think AI can certainly help on a massive front with record keeping and data collation. And I think also it has it'll probably get to that point where it can just filter out when you're talking about an industry where you have hundreds of potential products that you could be talking about with a customer. In the blink of an eye, we have the processing power now to be able to just filter out everything that's irrelevant so that a broker's got three options in front of them. They know those options are all valid and good. And then you're just having a conversation with the customer. So I actually think AI has that great potential to just make the personal interaction between the broker and the consumer, which is really the most important part of the service they provide, for that to become the priority and to become the most important part, whereas AI can just handle all the stuff in the background.
Yeah, and not replace the broker. So brokers shouldn't think they're at risk. I think one of the areas at risk is, it's very common these days to outsource your administration. I kind of think AI will do all that, and these outsourcing businesses might have a challenged future somewhere. Maybe not tomorrow, but
Yeah, and you hear how that's changing as well. So the outsourced businesses, instead of actually doing it, are involving AI. So they're changing their pricing and their packaging around how much AI they use to support the services that they provide. So they're still creating a role for themselves in that outsourced space, but it's no longer having someone typing up notes and typing up records of interviews and things. It's getting AI to do it, but them packaging it and managing it for the business.
So I know it's a bit of a sideline, but it's almost like lawyers who are running off template documents for processing. You kind of think that's almost a dinosaur, right?
Yeah,
AI is going to write it all.
Yeah, I think anything that's really highly process driven and highly precedent driven is that's very low hanging fruit for AI, because we're past that point where it's pre-fill a form. I think AI has the ability to take more nuanced information and know what to do with it, and create better quality produced information with that information.
Raises some interesting questions though. Like recently, Google's Gemini just updated so that all of your information is going into the big wide web. And people that are outside or don't have proper technical advice, don't understand that. LinkedIn, as an example, is now using your posts for AI. And when you talk about outsourcing, well, that's great. You're outsourcing it. They're using AI, but then how do you know where those systems are taking that data? And it's all going to become about protection of your data and understanding where the data goes and, how many layers deep. Sometimes we jump on meetings and there's minute takings from other people that, just automatically come into the meeting now. You don't know where that notation is going and where that conversation's being stored. So, really, it's a bit overwhelming. It can be a bit overwhelming to understand, well, where does it start? Where does it stop? You can't, as you say, Pete, stick your head in the sand and not do anything. But you've also got to make sure that you're safe with what you do too. And a lot of brokers are small business people, so they have systems outside of the bigger aggregation support because they need that. They need to be able to process and do things more quickly these days. And so understanding, well, how do I do that and be safe? I think it's going to be a really big thing next year.
And you mentioned privacy. Privacy is a huge thing, right? Because brokers actually have obligations under the privacy legislation. And so you're in this situation where you've got all this legal responsibility to take information and keep it secure and only use it for the purpose for which it's gathered. But then on the other hand, you've got systems which force you to disgorge everything into a system which goes off and does stuff with it, and you don't actually know what it's doing. And so on the one hand, you can't participate in the AI revolution without giving up control of all this information. But on the other hand, you've got this legislation which is enforced quite strictly, forcing you to have these controls in place. Otherwise, you're responsible for what happens to it. And there's plenty of AFCA claims that go through relating to privacy. And when you think about it, privacy breaches, whilst unpleasant, quite often don't have a financial consequence. And yet AFCA can make an award against somebody for tens of thousands of dollars if they think that it's appropriate to award money to somebody for a perceived privacy breach. And I've seen some clangers in AFCA decisions on privacy.
Don't mess with it.
Empty yourself. It's interesting. There's so much involved in this industry, and there's so many complexities and dynamics that play a part of it. I think AI is a critical solution to the future and to where we're heading as an industry. But we've still got to watch these interplays that's happening with regulators and ASIC, and whether it's AFCA, whether it's compensation scheme, last resort. All these things intertwine somewhere, and I think it's fascinating conversations to explore. And I think we'll probably have you back to talk a little bit more. But for now, we're probably the end of our time with this. And thank you so much for being a part of Unscripted.
It's been my pleasure. Thank you.